All right. Good morning, everybody. Almost at the end of the week. Other than the drama coming out of the White House, we really don't have much at this point. Taiwan Semiconductors did really good, and their continued beat. They haven't had a miss since 2021 or like 2020. It's been a while. They they raised, that kicked Nvidia into gear, and should help the other chips, but we're really not seeing that bleed through into the markets. You think we're getting a rip in chips and tech, we should see it. We really aren't. The spot gamma call wall was rolled up and the put wall was rolled down. So we have that. Um, it doesn't mean much at this point, right? It's so close to the end of the month, options wise. We're going to be kicking off in just a few days. So we'll see where they're at tomorrow. Just remember that on OPEX week, the algos will just search for the next available strike with the highest level of notional value, and that's where it's going to define the next wall. It doesn't necessarily mean that they went in and positioned those calls or those puts. And why would they, right? It's OPEX. They're more likely to just stay the course with what they have than to think that they're going in there and moving those monthly contracts with just a few days to go. Having said that, though, not all of these options are traded by funds and firms using a monthly bias and a monthly time frame, obviously, right? 0 days is a really big deal. And in 0 day logic, there is still a lot of players that will say on Wednesday night, put on Thursday's expiring trades, which does adjust the call and the put wall. So there's no simple answer to any of it. But the call wall being rolled up suggests that if we try to break that range to the upside, we could actually maybe get out. And also the same thing to the downside, that the guardrails around that range that we've been talking about have widened out a little or have weakened. Looking at what's going on around the world this morning, Europe's in the green, Asia, well, at least Hong Kong, just slightly negative. Japan also, say, at 0.25%, with our Dow and small caps, while the S&P and the Nasdaq are flat. So I mean, we really got nothing at this point. Looking at what's on the table, job numbers always important, right? Always. The Fed has a dual mandate, and this is one of them. So you always want to pay particular attention to the job numbers. And I don't like to say that, none of the data matters, but there are more important job numbers than other job numbers, right? And depending on when you're looking at them and how much impact they have. So yeah, we got numbers today. They're not far out of line, and it's very likely that that they don't move anything. But the threat is, what if they're way off, right? If they're projecting a slight bump up from 227 to 234, what if it lands into 264, right? That would be shock and awe, surprise. That would definitely move markets. Same thing the other way around. If jobless claims happen to drop from 227 down to just straight up 200, that would shock markets. So we don't have any expectations of drama this morning with the number being so small. The trip will be if they are just way off base. And hey, it happens, right? It happens for a number of reasons, like when hurricanes hit a particular sector or area of the nation and they don't have power for a month, or uh, something like that that really disrupts things for an extended period of time. But then there's when school gets out, that messes with jobs and holiday hiring and then layoffs afterwards. So yeah, it fluctuates. They could miss. We don't expect them to miss today, but just watch the clock. Got a lot of Fed speakers chipping teeth, and the president still running out of both sides of his mouth. No, he's not interested in firing Powell, but he's continuing to ask all his legal advisors how he can fire Powell. Whatever, right? The markets don't like it. They don't like the uncertainty. They also don't like the implications that he could put a yes man into that position who would just bend the knee and do whatever they're told. So that's got the markets a little shook up. It won't bode well if they finally do force him to resign for whatever reason. And I know, there's a lot of talk about, well, he can't do this and he can't do that. And I'm saying that everybody has a breaking point. And we don't know what Powell's breaking point is, but everybody has one. And sooner or later, they'll find it and they'll push on it and then he'll break. So if they want him gone, he will be gone. But what the markets are going to end up doing about it will be something. And then how long it's going to take to get somebody else in there, right? All the confirmation hearings and both sides, just pushing it to the max. It'll be drama and a mess, and we will be without a Fed leader. It has messed out all kinds of things up. So, fun times. Really, by the time we get done with the morning session, we're done with all of the economic stuff for the day. The afternoon is Fed speakers, but they're just tooting the same horn that they've been tooting. Nothing new coming out of that. So, yeah, look at where they're going to be at and where they're going to be talking. You can always search to see if they're even going to be doing it live. A lot of those are pre-recorded or it's done in private and they're not taking any questions from, like press. And so they have honestly no impact whatsoever. We never know until we start to dig down into it where they're going to be at. This is a virtual speech about artificial intelligence and innovation. It's very likely that they are, this one's not going to move the market, right? So just kind of peek around when it comes to these Fed member meetings and who's speaking and where they're speaking. And you'll find most of the time that it's not even an issue. It was funny, right? The way that they said it was virtual. So maybe it's going to be some kind of hologram and I don't know, maybe it'd be a fake Fed speaker. Cook, isn't that Lisa Cook? I'm Yeah, it's Lisa. So maybe she I don't know, maybe she cloned herself and it's something virtual. Drama, and I don't know. Get AI to program an AI and save yourself the work. I was picking up on a just detour here for a second. I was picking up on a little bit of volume coming in at the wrong time of day. It's kind of funny. Wrong time of day. Is there a wrong time of day for volume? There's this volume that's been coming in at 1 to 1:30 in the morning recently. I don't know volume on this chart. And it's not Europe's open, right? And the time zone changes with daylight savings in the US and daylight savings in other nations. And the open for different markets changes. That's just the way it is, right? Because the time zone changes. So Europe's open is at 3 o'clock, and it didn't used to be, right? For a while, it was like somewhere else. But I keep seeing this volume coming in between, say, 1 and 1:30. This one happens to be 1:30, right? Bugging the heck out of me. Where's this volume coming from? It could be because, say, for an example, Asia has some economic event and it's happening at that time in their nation, right? Could be something like that, or Sydney or whatever, but it's not. It's too consistent. If that was CPI for Sydney, for an example, then it would have only happened once, and it's happening again and again and again. So I'm hunting around. I'm trying to find what this is, and it ties into a market open for like one of the sand countries. The which one it was. It's Tehran. It's Iran. There you go. That's the Iranian stock market open. They're getting a little push. They're getting some volume over there. Imagine that. Um, hey, any flow is good flow. Right? Take what we can get. See what happens when you nerd out on volume at 3 o'clock in the morning? Flow that just doesn't belong there or didn't belong there. Shouldn't have been there. I'll take it though. Whatever. Take what we can get. Give nothing back. So the call wall rolled up. The put wall rolled down. They're removing the guardrails. We're still above zero gamma, still above the 20, the 10, the 3-week. Nothing is broken yet, right? We're still in that range that we've been discussing for a long time now. It's likely we're going to stay in that range until the end of OPEX. I think we have Netflix today for earnings. We're looking at 52,000 in the overnight volume. That's right there on the spot, right? That's been the norm lately, is around 50,000. So the overnight volume, no surprise there. And right now the put wall is at the 10-week. We don't want to see either one of those by the end of the week. Average daily range is now below 60. It continues to shrink because we continue to not have one of those big blowout moves. We really don't have much edge on one side or the other here, except to say that we could hit the lower ADR because it doesn't require us to break out of yesterday's range to do it, right? We could stay inside of yesterday's range and we could hit that ADR. But to hit this one, we would need to break out of yesterday's range. So that's the only reason that hitting the lower one would be more likely than hitting the upper one. Having said that, though, the range continues. And even if we do break out on the week, I mean, just like we did yesterday, we broke out. We didn't go anywhere. And I hope you guys really was able to monetize that, because I've been, singing it from the rafters all week. We have no reason to believe that this market is going to get out of this range this week. So anytime we try to get out of this range, play the reversal. If you're wrong, you'll take a small loss, and then you can flip over and you can take the other side, and it will be a fantastic run. Because if we do get out of this range and we actually go, oh goodness, we're going to go. So play the reversal. Buy into weakness, sell into strength, play the reversal, stay within the box. And if you happen to be wrong, then it'll be a small loss, and you'll be able to flip it and run it the other way, because it will offer you a lot when we do go, and you'll be able to take the other side and just make it back. Yesterday was a perfect example of that. And we have no expectation that it's going to change until, the end of the week. You certainly could, right? You could run a straddle. Yesterday we were talking about calendars, right? Double diagonals and calendars. For those, not really up to speed on your options plays, it's where you would sell the front and buy the back. So for an example, if I sold a call that was going to expire on Friday and I bought a call for, say Monday or next week sometime, then the short call expires, helps me pay for the long call, and I could close them both at once, just finish the trade as a complete unit, or after the short call expires, just keep the long call on the expectation that we're actually going to go somewhere next week. Now, I said calls, but you could do it with puts too, and of course you could run it up or down. This tight range doesn't have a directional bias to it at this point. It's just a tight range. We know we're going to leave the range, and there's a lot of reasons to believe that when we do leave the range, we're going to go to the downside, but it's not hard to have that downside bias when everything sounds so negative out there. But it's been sounding negative out there all year, and after the April lows, all we've done is run in the face of all of that negativity right back up. So, keep your feelings out of it and just trade what you got. We're back above the weekly pivot, which puts us in a bullish bias to the edge of the range anyways. And we have an MDP at this point. That's a missed daily pivot. Daily pivot is 6284-ish right down here. And we haven't hit it yet. The implication would be that if we get back inside that channel, that we likely do hit it. It is a wide channel, all things considered, but it's narrower than the channel that we had yesterday. Today's floor pivot is lower than yesterday. That is bearish, but we opened above it, and that is bullish. Still, it does imply a little bit of a negative state because we would have to go down to close it, and that would give us a new Globex low. If we don't hit it today, it will count for tomorrow as a missed daily pivot. If you have never heard that phrase before, just go to YouTube. Somebody did a couple of videos on it. It's a strategy, which I do not trade, but learning that strategy gave me an opportunity to use pivots in a way that I can analyze them, analyze price and what's going on. So even if you don't want to trade the pivot strategy, it's worth learning it just because you'll pick up another way to perform another nuanced piece of technical analysis. So it's worth it. In fact, it's not that complicated, all things considered. So with the range that we got, it's worth taking a peek again at the SNR levels. Today's pivot is lower than yesterday's, so we expect everything to be a little lower. You can see that the R3 is lower, the S3 is lower, but the R3 is farther down than the S3 is, right? This thing is not balanced equally, and the imbalance oftentimes will give you a little bit of a hint of which way the math is running. The math has been running to the downside all week. It's been pointing to a consistent move lower. Not that we've actually been getting it, but that's what it's been pointing to. $60.66 is the 10-week. If we do get ugly, that's where we're headed. It's been a very uniform trading week, and it looks very similar to last week's. They could be sisters. We have to wonder how much liquidity is left down here on that first touch play. from a first touch play perspective, that was phenomenal. They don't usually work out that well. But that'll be our line in the sand at this point for the week and for things to start to get a little rough. If we break that 62.50, then we've got 61.50 as the next stopping point. That would be under the 20 period daily moving average, and it would be under the 10 week. No, it wouldn't. It would still be above the 10 week. 10-day, 30-minute volume profile and TPO, we still have a discrepancy between these two. At least the TPO is starting to perform a little bit more of a classic shape. Still watch these two to see which one is going to line out first. It's likely if we don't break down and we stick around this point of control on the volume profile that we'll see the TPO's point of control come up here. It's also likely that we'll see the value area shift on that thing, but it's been a solid distribution. I mean, that's really clean. It's a nice taper. Just got to appreciate it when you get one. So with this point of control, we're in this sort of zone and we can chop back and forth through this thing. It won't act as a support or resistance because we're there. We would need to leave that zone or that range and then come back into it to see it begin to respond as any sort of support or resistance. And with time running out on the week, it's hard to believe that we could get out of this range and then come back into it and have time to hit it and work with it and respond to it. So just get through OPEX. The value area that we're looking at here is pretty much the range that we're working with, right? That 63.37 on the upside and 62.40 on the downside. I mean, really, that just lays it out. And if you want to round this up just a little bit, then it's 40 to 40, right? 63.40 to 62.40. So we carried forward this VPOC from Tuesday into Wednesday's trading, and you had a nice first touch play here. Ran up into it and had a nice pullback. I talk about these first touch plays. They don't give you much most of the time, right? 3, 4, maybe 5 points. And so, it comes down to how you start to trade. If you generally start, with 1 or 2 contracts and then add more as you go versus starting with, a pretty good chunk, 5, 6, 8 contracts and then cutting them loose as you go. For these first touch plays, knowing we're not expecting much, 3 to 5 points, tend to start with a good position size and then fade out of it in the move. We're done with that VPOC, but we did develop another one yesterday, 62.82. I'm not going to set this exactly on the line because I just round it to the nearest dollar, but you could, right? You absolutely could zoom in all the way and get it right on that point of control to the tick perfectly. I'm not going to do that. So if we break down this morning, we have that level to kind of keep an eye on. And then, of course, the half back of yesterday. So we got 83 and 74. Call it 75 for the half back. And the true close is somewhere around that 87 area. That's TRU close, right? Not true like in true and false. Little discrepancy this morning between the TPO and the volume profiles point of control. We should see this TPO's point of control move up soon, unless we make it back down there before it moves. Then we'll likely see the point of control on the volume profile move down. Either way, we're just a bit out of sync, and while we got a nice double distribution going here, sooner or later we're going to come out of it. The expectation would be that we head out of it to the downside, but it doesn't have to. The range, as I've already mentioned, is 100 points wide, and we're in the middle of it. There's no bias to say that we're going to go, to the upper edge or the lower edge, just that we likely can't stay within this 30-point range that we've built this morning. We're going to come out of this, and there's no reason to bet on which direction we come out of it. Just trade whatever direction we get. Weekly expected move. We are still at Friday's close. We haven't done anything all week. 3.3% above the 10. That's the 10-week. So we're just easing our way back. Everything is still fine here. And after getting into the 10 earlier this week, we're back above it, just kind of hanging out. But we're really close to the 10. We're at less than a 0.5%. And the 10 acts a bit like gravity. I guess the easiest way to kind of think of it analogy-wise is if you're standing in a pool, it's, say, the kids' side of the pool, 2 feet deep or so, and you try to jump, you can jump. You're not going to get very far, but you can jump. It just holds you back, right? So the 10-day, it's a lot like that. You can move away from it, but it's sluggish and it takes more effort. And a lot of times we see markets get into that 10 zone and just hang out there and get a bit of a reset. Even the options flow and the options volume and everything just kind of normalizes a bit. You see the implied vol on the strikes ease off, skews start to shift. So we get into that 10-day and that little band around it, and it's almost like the center of the storm, right? Like the calm in the center of a storm. It's hard to describe, but we're there. So until we get out of it, we could sit here and chop, right? Like we have been. We've been kind of screwing around with this zone since May. Yeah, you didn't see that volume? No, we'll talk about it later. Looking at things that are down this morning, uranium, 0.5%, but look, it made an 8.5% move in 5 days, kind of due for a little bit of pullback, right? So I'm not bearish on uranium. It's just, it needs a bit of a pullback. Bitcoin still giving back those gains from earlier this week. Gold miners also off, but they've been off, right? Over a 5-day period, they're now negative. This finally tipped the scale and put them in the red. Triple X China or double X, whatever that is China is down. Metals and mining moving negative. They're not quite there yet, but they are down and headed that way. More China. Airlines, but they're not enough, right? We need a 0.5%, and we don't have that yet. And look, we do the morning briefing early, right? Like I have to do it early because I got other things to do before the market opens. So my benchmark is a 0.5%. But if you're running this same collection of things before the open, you're going to want to use a higher change percent, right? If you're doing this at, say, like 8:45, 9 o'clock, your change percent should be at least 1.5%, because you're trying to narrow the field, right? So the only reason I'm using a half is because we're doing it so early. Looking at things that are up this morning, the Mag 7's up volume is up. That's a double positive. And the VIX is up, which we just had contract changes anyways, right? So get a little bit of a move from that. Just to clarify something here. If you're going to trade the VIX and we're getting close to that point where we're all going to start shopping around for some VIX options, and you're thinking, well, I'm going to grab some VIX options, probably something at the money. What is at the money? I know you think the broker is differentiating between, hey, the price is 730, these options are at the money. That's not the way it works. Look at how far the contract has to expire. So I'm going to go out here to, let's just use September. 61 days. If I want at the money options for the September expiration VIX contract, 61 days to expiration, I got to go to the VIX futures and find 60 days. Right there. At the money is $20.80. So I'd be looking at the $20 or the 2050 and then, 21. Here's at the money. I'd have to go that far out of the money just to find at the money, right? I know it sounds confusing, but whatever. I've done videos on this before, right? We've got like a 30 video series on the VIX, and honestly, I could have done another 30 videos on it. There's so much to learn when it comes to volatility, but that's your at the money. And it's just really simple to do. Match the days to expiration with the VX futures contract to find where your at the money is. And that way, from there, you can start shopping for out of the money if you want, or at the money, whatever you're doing. At least you're not handicapping yourself, right? Going too deep in the money when you don't need to, and then you're not getting the sort of decay you want, especially if you're going to try to sell this stuff, right? Like selling an out of the money contract, and you think you're out of the money when you come out here and you sell call credit spread, and then you find out you weren't even out of the money in the first place. You were selling that actually in the money. That doesn't do you any good. Sorry, tangent. Saw a squirrel, something shiny. So bonds didn't make it through that year-to-date anchored VWAP and headed back down again. Keep your eye on this one. See if we can get a higher low on the year, right? We set this low back here in May. We had a nice run up to the anchor. Now we're pulling back. All of this is going to take time, right? It's just a big zone that we're working in here. But we thought we were going to get the low of the year back here, right? With that kind of a double bottom play that we had. Then we ended up breaking that and we set a new one. So, now what are we going to get? Well, back it up. We thought it was the same thing here. We were going to get a double bottom. We didn't. We ended up with a low and then a lower low, a lower low, and a lower low. So keep your eye on this. At the bare minimum, we should get a nice short-term sweep back up, kind of like we did here when we matched that one with this one, and we at least had a little bit of a run before we dumped. If we can match it again, maybe get a little bit, set a lower high around that 87 area. So at the moment, we're looking for either a new lower low and then on the reversal, whether or not we're going to get a higher high here or a lower high. Gold miners, it's pretty tight range. They're doing what we're doing, just kind of hanging out, not doing anything really. That's your control bar, July 8th. GTFO, got to get out of that box. Bitcoin. That's the peak that we got to play. It'd be a nice 1, 2, 3, 6 breakout, 111. So what's leading this morning at pot stocks? You don't want a rally on pot stocks. Then we got VIX, crude, dollar. None of that. We don't want to rally on that stuff. So we want to see where's our Mag 7 and chips and cloud computing and technology. And that's the stuff that we want for a rally day. And we don't have any of it. So watch for 0-day flows and headlines that could shake us out of the loop and get us going, right? Otherwise, if we're looking for the catalyst that's going to get us out of this box and get us moving, we don't have anything unless job numbers miss, right? Something like that. Some shock and all that we didn't see coming. It's a wide range. It's 100 points. Start with the smallest range that you have. It's your Globex. Get out of that. Then you've got yesterday's range. Then you got the range on the week. On and on and on. Right? It's very likely going to be another boring day, but all of that can change. So just keep your eye on the headlines. That's what I got for you guys. Be careful. Be safe. I'll see y'all tomorrow.